Hello dear learners, welcome again. In this video I am going to discuss meaning, definition and nature of business economics. If you find it useful, please like it, and if you have not subscribed my channel yet, please subscribe it. It's for free. So let us start with the topic meaning of business economics. Economic theories, analytical tools used in business decision making is categorized into a separate branch of study, and it is called as business economics or managerial economics. The economics basic function is to study how people, whether it is individual, households, firms and countries, the ultimate goal of all these entities are to maximize their gains from their limited resources and opportunities. So in economic terminology, this is called maximizing or optimizing behavior, whether it is individual, organization or companies or country. Every entity tries to optimize the behavior, and optimizing behavior simply means selecting the best out of available options with the objective of maximizing gains from the given resources. Whatever resources are given, out of that given resources, how one can maximize their gains and utility. That is the objective of any organization or individual or households. There are several definitions. I have listed down some of the famous definition of business economics. First one is by Mansfield. Managerial economics is concerned with the application of economic concepts, economics to the problems of formulating rational decision making. So managerial economics is nothing but application of economic concepts and the economics to solve the problems, and it helps in formulating rational decision making. Right, that is the gist of this definition. Next, managerial economics is the integration of economic theory with business practice for the purpose of facilitating decision making and forward planning by the management. So managerial economics integrates economic theory with business practice so that it can facilitate business decision making and for future planning by the management of the company. So this is the second definition. Third definition, according to Haig, managerial economics is concerned with using the logic of economics, mathematics and statistics. So managerial economics combines these three to provide effective ways of thinking about business decision problems. Whatever business decisions are there, business problems are there, how that can be solved with the integration of these three disciplines. That is the crux of this definition given by Haig. So in short, you can say that business economics solves the business problems. It is concerned with the managerial decision making problems, and how it solves that, the economic theories are combined with mathematical tools, and when you combine economic theory with quantitative techniques, you are studying nothing but business economics, and this business economics gives you those tools and techniques to solve the business decision problems and to arrive at optimal decision making or selecting best probable solution to the problem with the help of this business economic tools and techniques, which we get by combining the economic theory and quantitative tools. Okay, so this is the definition, meaning of the definition, above three definitions which we have seen. Moving on now to nature of business economics. What actually the inherent properties, inherent qualities of business economics? Number one, business economics is a science. Why it is a science? Because it is a systematic body of knowledge. It studies cause and effect relation, right? It studies with the help of mathematics, statistics, and econometrics, right? These three are the decision sciences, and with the help of these decision sciences, business economics integrates all these decision sciences to arrive at strategies and the techniques to help businesses achieve their goals, right? So this way, business economics is scientific in nature, and it is a science. It is treated as science because it is a systematic study. It studies cause and effect among the variables which affects the businesses. Second point is, it is based on microeconomics. Business economics is mainly concerned with decision making situations of individual establishments, individual companies. So therefore it depends more on the techniques of microeconomics. Okay. Thirdly, it incorporates elements of macroeconomics as well. Business economics incorporates elements of macroeconomics. Why? Because the businesses operate under certain rules and regulations of the economy. So the external environment, the economy, like income, employment, tax policies, and other fiscal policies affect the firm or the businesses. So all these external factors are a component of macroeconomy, and you must consider while studying individual business problems. So it incorporates elements of macroeconomics as well. Next point is, it is an art. Business economics is an art. Why it is an art? Because it requires the practical application of rules and principles to achieve the objectives, to solve the business problems. A manager needs to be artistic, needs to judge the situation and use the tools and techniques of business economics. So in this way, the study of business economics is an art as well. Next point is use of theory of markets and private enterprises. Business economics primarily uses theory of markets and private enterprises. It uses the theory of firm and resource allocation in private enterprise economy. So this way, nature of business economics is that it uses theory of markets and private enterprises. Okay. Next point is, it is pragmatic in approach. Business economics is practical in approach. It is not purely theoretical, but it solves the real life business problems. So it must be pragmatic or practical in approach. So though microeconomics is purely theoretical, but the business economics, when it combines microeconomic theory with the decision sciences, right, so it becomes pragmatic in nature, and it tries to solve the problems which the firms face in the real world. Next is interdisciplinary. Nature of business economics is this: business economics is interdisciplinary. It incorporates tools from other disciplines like mathematics, statistics, marketing, and other disciplines to arrive at a solution of a problem at the individual level, at organizational level. So in this way, this study of business economics is interdisciplinary in nature. Next is positive and normative. Business economics, whether it is positive or normative, what is the meaning of positive? A positive analyzes cause and effect relationship. What is there? What is the relation between variables in a scientific manner? On the other hand, In other words, it describes the economic behavior of individual society without focusing on the desirability of such behavior. Whereas in case of normative science, it involves value judgments. It suggests a course of action under the given circumstances. What should be the proper solution? If an organization is making losses, how it can achieve profit? What should be done, right? So business economics actually focuses more on what should be the solution, what should be. Business economics is normative in nature, though it considers the practical aspects, the positive aspects of it. It offers suggestions for the application of economic principles while forming policies, making decisions and planning for the future of the company. But firms must understand the environment, the actual environment, what is prevailing. So the business economics considers the positive aspect, the actual environment, and then suggests. So this way you can say that business economics combines the essentials of both the theories while keeping more emphasis on normative economic theory or normative aspects. So this way business economics is more of normative in nature than positive, though it considers the positive aspects. Okay, so this is all about meaning, definition and nature of business economics. Thanks for watching.